Here's today's Trader Tip.
Hi, everybody. I'm Flynn, Senior Market Analyst at the Price Futures Group, as well as a Fox Business Network contributor. Chevron said it was a year like no other, and I think we can all attest to that. Chevron's earnings missed big as they challenged the demand drop from COVID-19 and as well some write-offs and some bad refining margins. Is Chevron a warning for other big oil companies whose earnings are going to be out later on? The answer is yes. I think oil companies' earnings are going to struggle in the last quarter and perhaps in the next quarter. And probably a bigger risk to the oil in the short term is concerns about climate change. S&P Global, the biggest rating agencies, warned about ExxonMobil, Chevron, Royal Dutch Shell, that the climate change risk to these old-fashioned oil companies is very high, so they're on ratings watch right now. What that means is that these companies could get in trouble because they might get sued because of climate change. I think that that's overstating the case a little bit. I think that because of the pullback in U.S. oil production, which we expect to happen, the price of oil is going to stay strong. So we think ultimately those stocks are going to do very well for the long term. But in the short term, there's going to be some rough seas ahead. So make sure you buckle down, stay safe, and if you want to think long term, I still believe in these companies in the long term. Short term, be careful. And that's your trader tip for this week.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.